Make Better Wealth Decisions, a podcast that explores how financial advisors' blind spots can harm your investments. I'm your host, John DeGuy, a portfolio manager with Design Securities in Toronto. In this podcast, we'll provide advice on how you can achieve better outcomes by maximizing investments and minimizing taxes. Let's put our thinking caps on as we consciously decide to get smarter about our money. On Thursday, we had a great conversation with Ian Tam of Morningstar. He's the Director of Research for all of Canada. And we talked about how the mutual fund industry and the exchange-traded fund industry are evolving. And as we come to the end of 2024, I cannot help but think that there are a lot of things that have been very much part of the discussion for the past generation that remain unresolved, even though progress is being made, and it's being made at what I would say, a middling glacial sort of pace. In 2019, in May, I released a book. The book was called Stand Up to the Financial Services Industry. And it deals with a lot of these subjects and how financial advisors have misguided beliefs. The word stand up is a long-winded acronym, and it stands for Scientific Testing and Necessary Disintermediation Underpin Professionalism. In essence, what it means is that true professionals disclose facts and they make decisions based on evidence. So scientific testing, what does the evidence say? Necessary disintermediation is getting rid of embedded compensation, trailing commissions. And those two things, making recommendations based on evidence with no bias that's caused by compensation, are the two pillars that are required to make financial advisors professionals the way doctors, dentists, lawyers, and accountants are professionals. Now, the industry, it's interesting in Canada because we're still at the point where, and we talked about this on the podcast, where about 85% of all assets in Canada are still being managed on an active basis, even though there's evidence from a guy by the name of Bill Sharp in the arithmetic of active management, which, by the way, is one of the resources that we put in Stand Up to the Financial Services Industry, shows that after all costs have been taken into account, the average passive manager must outperform the average passive manager. And that's because the returns of the benchmark are the same for both before costs, but because active management costs more than passive management, active will have lower net returns. It will also have a higher tax liability because of higher turnover. But that is a bit of evidence that a lot of people don't know about. And the reason they don't know about it is because the industry engages in, look over the shoulder here, bullshift. It shifts your attention to make you feel bullish, and it basically makes you feel good about active investing, even though statistically and empirically, you'd be much better off if you simply work with an advisor to help you maybe talk about how you could do more, think more about how you could integrate pensions and use government programs and plan for your future, making those decisions intelligently, making better wealth decisions. But the decision about how to get access to public markets is probably one that has already been resolved, and you're better off just buying cheap, low cost, low turnover products that get a broad exposure to as many stocks as possible so that you don't take on concentration risk or sector risk or anything like that. And you simply participate in the fruits of the stock market. The financial services industry is evolving, as I mentioned, and we're getting better. We're becoming more professionalized, but it is slow. A couple of months ago, I was at a conference called Future Proof in Huntington Beach, California, and I can tell you that American advisors are way ahead of Canadian advisors in terms of being fiduciaries, in terms of being evidence-based, in terms of being client-centric, and using FinTech to offer a better client experience. I'm excited about where the industry is going. I'm disappointed that it's taking as long as it has been, but at any rate, the overarching bit of news for everyone listening today is that we are making progress and there are better days ahead. We'll talk to you soon.
John DeGuy is a portfolio manager with Design Securities in Toronto. The views expressed in this program are not to be construed as specific advice. It is recommended that you consult a qualified advisor before taking action. His books, The Professional Financial Advisor 4, Stand Up to the Financial Services Industry, and Bullshift are available through Amazon and in bookstores throughout Canada. You can reach John at 647-STAND-UP. That's 647-782-7455. 6387 or at jdegui@designedsecurities.ca.